Warriors, my first Friday broadcast in a couple of weeks. I just want to go back and review what I said before I left for Chicago for a while. And I opened up the program. You could go back 2 weeks ago, Friday, about W.D. Gann's expression of if you don't learn how to change your mind, you won't have any change left. And it was based upon what I've seen in the dollar. I said, do not be short the dollar. It could possibly wash under 100, but it looks like a wedge, and we're going to get a recovery at least to 102, 102.50. And here we are 2 weeks later. Um, I also want to emphasize that it's not just getting to a price, it's how it gets there. The structure and the strength of a move and the length of a move rather than just a price that you blindly act on because that may have been a target. So we're always reassessing what happened. My reassessment of the dollar was that, we were diverging all over the place. There were too many dollar bears, and we needed to at least correct this decline. Now, the way it did it, um, also changed my mind for maybe, the next few months because I think eventually we're headed up towards 106. But I would not be buying the dollar here. As you can see, we're holding a bit above this return line, which we tagged here, and it's going to take it back under 102.80, which is only, 10 points away. And my expectations is that there's going to be a pullback towards 101.50, and that's where I'd be interested in looking for longs in the dollar and reshorting something like euro, which has been the weakness. So Aussie looks like it could recover. Let's go to euro. So euro, perhaps we get a rally back towards 110.50 or so. That would be a sell in my mind. 2 weeks ago, I said, look, we gave euro a chance. We were buying it at very good levels. We had a nice run, but it started to diverge. It had its chance. I thought we were going to trade 114, but the action was lousy. Euro pound was still heading lower. And I said, it's time to look for the other side and look for a dollar rally. We gave it a chance and it failed. Then while I was gone, the acceleration to the downside occurred. Uh, Pound was leading the way, and same scenario with the pound. You had some divergence up here. I'd sell rallies back up towards maybe a right shoulder. If we had a rally back above 132, 32 and a half next week, I would try it there for a sell. Aussie actually has had the best reaction yesterday by putting in this type of candle. Remember, I said, well, I'm not buying it here, even though, we had it negate the breakout, then trade up here, and now we're well under the breakout. So a natural thing for the Aussie to do might be for it to rally back towards 68 or maybe this level, and that be a short for me because I'm thinking this is going to be deeper. If we're going to 106, Aussie could trade back down to 4.5. If you recall from the 140 level, and especially last week, I was talking about the yen recovering towards 150. The 140 level was very significant, as I did point out, and that's why I felt that besides some divergences, that the yen would bounce, because if you look left, this 140 level is huge, and postulated that we could get a right shoulder, okay, of a head and shoulders top, with this being the left shoulder ahead, and this left shoulder's coming in, right around 51 and a quarter. I'll look to attempt shorts in the yen up around from 150 and a half to 151. I think there'll be a pretty good pullback. This is a weekly, so it's done nothing wrong again this week, so I think I'm going to have a chance. You also have potentially a third drive to a top that's going to come in right around the 150 level. So looking for yen shorts, which should coincide with at least some type of pullback in yields. So yields actually went further than I thought. I was looking for 4%, and here we are at 409. I don't know if that disturbs the longer term count, but I would expect at least a pullback when the yen peaks um, in the 10-year yield. If we're not going to make new lows, we could certainly pull back towards 390, 380. And what's pretty cool is what happened yesterday in TLT. I don't know if it's going to hold or not, but we're right here at this prior breakout. Old resistance becomes new support. So I think there's going to be something in the bonds here between this level and the moving average. Maybe you're wrong, under 92. But, this could be some type of turn, could be related to risk off down the road. But this is kind of do or die for the bull case in TLT around these levels. So nothing I'm doing today, I'm not a big believer in initiating new positions on a Friday unless we have a huge inflection point like NFP report or so. The inflation reports were not enough for me to try and make my week on a Friday. So that's the currencies. Also, I put out warning. I said, do not short Canada because if I'm right about a dollar turn, it'll rip your face off. And this has really been the best rally. Much stronger than the euro was weak, much stronger than the dollar rally. Okay, so Canada, now I'd be looking for pullbacks to buy in Canada because, this was impulsive. We didn't get a zigzag move up to this level. We just straight line. And when markets get from point A to point B in a hurry, Ellioticians called that impulsive. So I actually think that we're going to challenge these highs eventually and take them out. So I'd be looking for buys between 6.5 and 6 in the coming days for a push up towards over 139. That's, NOK not as strong, but Canada, hope you heeded that advice. Maybe you got long. Euro pound still, still looks like there's new lows coming in that unless we get an ABC. No clear conviction on that. And well, let's get to the metals. So gold looks like it wants a new high. And I came back to thinking that's going to happen is because, look, we have a confirmed high here before we peaked. Looks like we're going to make a new high. Is silver going to make a new high? A little different look, right? If it does, it'll be a 3 driver. I know a lot of people are real bullish, but if you're long silver, and I believe it was 2 weeks ago, I said, book it between the 28 longs at 32 to 33, that was the high. Watch this $30 level if this rally fails, because under 30 is going to be a pretty negative sign. That's going to lead towards at least a pullback towards 27. So earlier in the week, I said sell rips. This is a rip. The only thing that discourages me is the gold strength. But what encourages me is what I'm seeing in the gold silver ratio. Now, I know the last couple of days it's not acting great, but to me, this looks more like a consolidation that eventually is going to give us a move to over 90, which says gold will outperform silver. It's not necessarily a directional tool, but it tells you your preferred longs and shorts. And if we're going to head up here, your preferred long is gold when metals are going up, and your preferred short is silver. So if we're going to head back above 90, that also isn't real supportive of silver blasting off to the upside. Time will tell there. Let's just cover a little bit about the energy. I know all the economists are bearish, and the U.S. Really has a great supply. We're energy independent, but what's happening in the Middle East is here's my Nostrapinker on the Middle East. I don't think there'll be retaliation this weekend. It's high holy days. Enemies might attack, but I don't think Israel will attack. And maybe everyone else doesn't think so too because of the high holidays. Maybe that's what they do. But I do think they're going to retaliate. And I think after that retaliation, there still is. I've been talking about this for a long time since the war started. That if it got to the stage where it was turned into a hot war with Iran, that something could happen in the Strait of Hormuz. And just technically, when you look at this triangle, what's been going on here? Algo's looking for liquidity to shake out as many people as possible before the move they're looking for happens. And that's what happened here. All right. So they shook out all the bulls. I know some people that got out, never got back down to 62. And now I think they're going to shake out all the bears by taking out this triangle line at 81.75, which is, this week's highs, a little bit above this week's highs, and get the bears to capitulate. I see stops here. I see stops here, and the grand prize is here, which would give us 100. And, there aren't many times in history, you don't bet the farm. But there aren't many times in history where you have this type of geopolitical environment to where, it seems obvious it should be long oil, but it's surprising how many people don't want to be long oil, and I'm conflicted. But I'll tell you something, I wouldn't be short oil. Even if this thing is going to work and it's going to go to $40, the object of this game is not to put yourself into an extreme risk exposure position. And overnight, if something happens, you could see $5, $10 higher opening that could, really do serious damage to your account depending upon your position. So I just do not recommend shorting the crude in this environment. Possibly after a retaliation and they've taken out all the shorts, might be a good time. But, I'm not in favor of it. You could be long, just buy some calls for lottos in case the worst happens. You're there. But it makes sense to me that since they cleaned out the bulls and had a false breakdown in this triangle, that as long as we're holding the low, which, by the way, Andy Constance bought live during his interview on Wednesday at near the lows of the week, which were 72. So talked to him on X yesterday. He's still long, looking to get out near the attack, and when there's an attack, that makes sense that now the liquidity is above the market. Okay, that shorts they took out most of the longs except for these guys here, and now I think they're shorts to be squeezed. All right, so let's talk about S&Ps here. New all-time highs. We're in the third drive. The weekly is diverging dramatically, and I'm thinking that I'm going to try the number that we got from Steve Marcantonio the other week. It's done nothing wrong. Looks great coming out of a triangle. His number was about 58.50. The 4 hours still diverging. The daily, I believe, is still diverging. We know the weekly is. So I'm not saying it's going to be the top, but it could be a trade for a pullback before the final top up at 8.5. So I'm going to be looking at that level. It's only about 50 handles from where we are now. So that's my look there. And we'll see what happens. Let's take a look at IWM. Still looks like a bull flag here. So I think we're going to make new highs. 2 drives here. Take a quick look at some of the gold shares. So here's Newmont. Yeah, we can make a new high, won't confirm. Here's GDX. You know, I don't know. Still looks like that could be a failing rally. Could be a failing rally. Pretty close to making new highs. Maybe we need one more divergence. Not near the highs at all, and still could be vulnerable if I get that sell-off in silver that I think could happen on closes under 30. Looks okay trying to come out of here. Okay, so that's kind of I don't have a lot of conviction, but I'm going to wait to buy miners, and I'm going to wait until we probably mid-November, because if we get that trade, that sell-off into mid-November in the market after the elections, I think there'll be better levels to buy. Just a quick look at Bitcoin. It's sure taking its time trying to break out of this formation. Still needs closes over 68. And we'll see if the melt up could generate that for Bitcoin. But most focus on the dollar and the fact that the way the dollar came off par tells me that 106. So if we're going to 106 after a pullback, I have to think that I'm either wrong about yields or there's risk off. So I hope the guidance from 2 weeks kept you out of trouble. Maybe you're able to capitalize on it, and hope everyone has a great weekend. There's going to be, normally it's quiet once we get into the November, December timeframe. Not this year, guys. So see you in the room. Do your work over the weekend. I think you guys know where I stand. Looking just a takeaway. Looking for a pullback in the Dixie back towards 1.5 as a buying opportunity for a move. So if you go 1.618, this was 3. So 480 or so from 101.5 gives you 106.20, which is this major trend line. So this is what I'm talking about. The dollar having the potential to attack. Look at the weekly. Okay, so it's the trend line off all these hits. And I'm thinking that's going to be it, maybe into year end or before, and then we roll over again and we see 95. So good hunting the rest of the day. Don't just count your pips, count your blessings.